And we're back with another edition of the TradersCircle Podcast. I am once again joined by the venerable Michael Cornitz. Mike?
If I'm venerable, I'm happy to be here.
So hopefully you guys enjoy our videos, and I will just ask you at the start this time, if you do, to please consider subscribing. We're approaching 1,000 subscribers. It would really help us out a lot, and it costs you nothing. But on to the markets, Mike. They've been volatile. They've rebounded a little bit over the past week, and there's perhaps more tariffs to come from Donald Trump. So how do you see things?
Well, the market pulled back about 8-9%. I noticed the 12-month annualised return dropped. We were up about 9% a few months ago. That 12 months annualised return dropped down to nearly squared, 0.5% up. And I think over the last week we've had that rally, which I think you just mentioned. I think there's a couple of big concerns out there. Our friend Mr. Trump has April 2 as a special day, which I'm thinking you can elaborate on.
He called it Liberation Day. I guess he's maybe calling it that because we might see some shares liberated from their values. We might see American consumers liberated from their spending money as they pay as they pay higher prices. They pay additional taxes.
We could mention Greenland.
Yeah, we could mention Greenland. That could be liberated from Denmark. Who knows?
The 51st state of Canada.
Yeah, the 51st state of Canada.
And the Gulf of America.
He's
a winner.
Yeah, absolutely. But just on the tariffs, I think it is worth clarifying, because I've had a few conversations recently that it is the importing country that pays the tariff. So it is Americans that will be paying these tariffs. They'll be paying higher taxes, higher prices.
And the most interesting thing is listening to an American politician try to tell you that the American taxpayer won't be paying those taxes. So it's actually quite amusing.
It is very amusing. It boggles the mind how some people are in support of this. The one argument you could say is that it's a negotiating tactic. It's a bargaining chip. It's
I think the general thing it's lifting the general level of volatility in the market and the potential things that can break or be broken. You point to things like, other than the acrimony it's created with Canada, who've gone full force in targeting specific products that get exported to America, the whiskies that the rums that come from Texas, the orange juice that comes from Florida. So they're targeting their retaliation and really trying to hurt the Republican voter base.
Yep, absolutely. And, fair enough. I think, if it is trying to be used as a bargaining tactic, well, you want to try and generate some cards of your own. And I think that's what they're trying to do. And I think we also touched on last time around that in many ways, America's putting itself at a massive disadvantage here because they're going to be fighting 50 trade wars at once. Whereas each of their opponents is fighting one.
Yeah, I think the problem with the US, has come to a financial point where, look, it needs to do something. It's staring down the barrel of a consistent $2 trillion deficit a year. You pointed out that's about 7% of GDP. Yep. That's not look like it's going to improve. They've got an interest bill of over $1 trillion a year. They're going to have to do something about it. Interest rates may not come off. We can probably touch on that a little bit later. And the high publicity Doge scheme that the Elon Musk is running, I think it seems to make a lot of sense to a lot of people, but I think the implementation of closing down all those US aid programs, I think they're all written into law that those programs are to be spent, and coming along and saying they're a waste of money does not necessarily mean those programs will be cancelled. So I think there's a massive fight in Congress to actually formally close those potential savings in the budget.
Yep, absolutely. And I mean, those savings are really a drop in the bucket.
Correct.
I think the only real way that the deficit gap will be closed in America is with taxation. I don't think maybe if you look at massive welfare cuts, massive defense cuts, maybe then.
Yeah, but there's your political problem. I don't think I've seen ever since.
Not that we support that, by the way, but
no. We only look at political reality. I mean, you go back to 1933, where they introduced tariffs, which was a complete disaster. And extended the Great Depression, and which was only really pulled out of the Depression by World War II, which was wonderful infrastructure spent.
Absolutely, and also FDR's New Deal. And I did want to. I wasn't sure if our conversation was going to move towards that.
Let's go there.
But these days, at least half of America would have called that, communism. Probably they would have called it worse than socialism. They would have called it communism. And yet it led to the greatest period of economic expansion that the world has ever seen. And you could say, a lot of that was
I think
the Second World War as well.
Well, it was the end of the British Empire, and they were just losing strength all around the world as the colony started to shrink. And there was just this massive vacuum, between the 1920s and 1930s, 1940s. Americans came along, had this magnificent manufacturing base, producing a lot of things onshore. They were the net debtors. The world owed them money, and it was just the golden times, the 50s, the happy days, 50s, 60s and 70s.
Yep.
And then it's pretty much sort of come to a grinding halt, pretty much, the Ronald Reagan era.
Yeah, exactly, as they cut taxes on the wealthy, funnily enough. But before that, because it wasn't the money that trickled down after those taxes were cut.
It only trickled on the rich. The poor didn't get a trickle.
No, they didn't. not one drop. But before that, there were pretty high taxes on the wealthy in America. The highest marginal rate of income tax at times was north of 90%, I believe. And yet it didn't stop, it didn't stop.
But I don't think Trump's got any plans of lowering tax rates for the rich. And
well, I'll disagree on that point. But I think that's also secondary to the main discussion, which is, the taxes being raised are tariffs. And I think that, we're going to see a bit of a slowdown. And so we did see the Atlanta Fed's GDP forecast drift into the negative.
Yeah, I think we will have a slide put up there for you just to have a look at. It's sort of just really dropped into the negative territory, about negative 1.8%.
Yep, absolutely. That's for the first quarter. I guess we'll have to see how that plays out. But their forecasts are usually well in advance of the sort of consensus forecast. So I think the consensus forecast for the first quarter is still broadly positive.
Oh, absolutely. But I think the point is that when an official Atlanta Fed now figure comes out at negative 1.8, it just throws up more uncertainty. And for every analyst out there managing money is trying to make forecasts of where that economy is going. And what we've done is that's brought an element of uncertainty.
Absolutely. And in some ways, the economy is a giant confidence game.
At all times.
The greatest on earth. And when you get that hits to confidence, it can end up being a self-fulfilling prophecy.
Yeah, absolutely. But we have a financial economy nowadays. And I always feel the grassroots economy of a manufacturing and actually doing something. I think we're such a financial economy. There's at least $100 trillion out there that of debt that needs to be serviced, and if there's any hiccup in the value of the securities behind all that giant debt economy, things can go quickly off the rails.
Very, very quickly, and we've seen that in the past, and I suspect we'll probably see it again.
But I was interested in your tax comment.
Yes.
I was finding it hard to find out how we're going to punish the rich. What do you?
No, he's giving tax cuts to the rich.
Oh, that's what I said.
Yeah. Oh, sorry. Okay, I misinterpreted you. But he extended the temporary tax cuts for the rich.
So he needs to look after the welfare, the bottom 90%. He needs to look after them. He's going to reintroduce or extend his tax cuts from his first term. Where is the savings? It's not going to come from the Doge cuts.
No.
And it's not going to come from defence cuts.
Yeah, no, exactly. They've I guess with the Doge cuts, it's like they've got the tap open, the faucet open, and then they're sort of got a drip bottle, taking out a drop here or there, but it's nothing compared to what they're spending.
I think it's a lot of PR out there, and I think as avid readers, as I think a lot of people out there are nowadays, a lot of information. I think you're finding it hard to know what you can believe.
Yeah, I would agree with that. I would agree with that, and I think it's by design.
That's right.
Yeah,
well, yeah. I mean, we found with USAID, a lot of that US money was going overseas, which was pretty much just massaging the message out there. It was a propaganda machine. I think there might be some consensus on that. I'm sure some people can argue it, but I think what we have now is a true dichotomy between, Trump, who seems Mr. Practical, he wants to have peace with Russia. That doesn't say he's a Russian supporter. I think he's after peace. And I think what's come out, which is another destabilising, is the EU appears to be politically committed to a continuing fight with Russia. They need the enemy. And what they've tried to do is, because Germany hasn't borrowed net debt since 2009, they tried to introduce a stimulus budget of about 800 billion euro thereabouts for infrastructure and defence spending, but they can't get that through because there are quite a few recalcitrant members of the EU which won't pass that legislation.
Yeah.
Do you agree with that, or you got?
I mean, I find some of that contentious, and I think that whether you saying that Trump wants peace with Russia and peace in general to end the war, I would say that in many ways Trump wants Russia to gain a large amount of Ukraine, and I don't think that is a peaceful move. I don't think that's going to lead to longer term peace.
I think to try and marry our points of view, I think Trump is a mercantilist. So that's what he wants to do is be the guy who does trading. He wants trade.
Yeah,
right? And he sees more trade in America's favour. If he can stabilise that Ukraine-Russia region, because Ukraine is quite a large breadbasket for the Europeans. It has gas. It's got the gas pipelines that feeds the EU. It would be much more stable for the US to have peace.
I agree with you there. Where I disagree with you is that letting Russia keep a lot of this land, it sends the wrong message that, the world is open for conquest. So if you're a powerful nation and you take control of another area, that's fine. That's yours now. It returns to, governing through the sword rather than the pen.
So it's good how we've turned this into a more political discussion than an economic one. So I'll just disagree to you with the extent that there is some consensus growing that because of NATO moving east after it said it wouldn't after the Berlin Wall had fell, they said they wouldn't go east, and what they've done is they've just converted all the countries to the west of Ukraine. They've converted that into a NATO part. So there has been encroachment. And the Donbass and the Crimean region, which were pretty much Russian speakers, I think we spoke about this at work the other day.
Crimea, yes.
And the Donbass,
it's a bit more mixed.
And there was a movement to go back to Russia. Now, I think the point you're making that you just possibly disagree with that.
I think that in Crimea, yes. The fact that Crimea is currently Ukrainian is a artifact of Khrushchev's plan to seize power of the Soviet Union in the 50s. But
Crimea is a port to the
yeah. So I agree that
it's a port that the Russians strategically need, and they certainly won't give up.
Yes.
So then you get down to practicality of do you want a war or don't you want a war, not what is right and wrong.
Yeah. But you could make similar arguments about Taiwan, or they're ethnically Chinese, Mandarin speakers.
Sure. I'll still say for thousands of years, it's got the biggest gun and the best army.
Yeah.
And Taiwan, they're sort of losing their strategic value a little bit because the chip manufacturing is getting duplicated by China, and that'll be an interesting. I mean, is America interested in Taiwan because of world peace, or is it interested because it wants chip dominance?
Yeah.
So anyway, but again, let's try and drag it back to the market point of view, because it is interesting that Taiwan is losing some dominance in the chip manufacturing.
It certainly is. It certainly is, and I think that's going to continue to be the case. I think the race to scale down is only going to get stronger and stronger, and then you've got alternative forms of computing as well, and just naturally they will lose that edge over time. That's the nature of profitable advantages. So
I think economically, we got a potential for the US to actually have some. They can stabilise their economy. They can be doing things, bringing manufacturing onshore. There's a good case for a bullish US economy.
Yeah,
I'm less optimistic about the European economy.
I think you've got to weigh up whether you think this debt problem's going to spiral out of control or not. Because if it does, I would probably back the EU over America.
And that's probably where I disagree, because you can't look at debt as like compare it to your debt, where like if you spend too much, the bank's going to close you down. At the end of the day, the monetary system is, which is the economic philosophy, the Republican Party is fine, the Democratic Party is the modern monetary theory, which is you can print as much as you like until somebody says, well, I don't want it anymore. Now, because the US is still the preeminent currency in the world, I mean, the BRICS haven't made a move with their own currency. Gold is a little bit too much of a static commodity to be a useful means of exchange. So until you have something else that you would have confidence to put your nation saving into. For example, China's got $800 billion of US Treasury, and Japan's got similar amounts. Where would you feel it's safe to put the nation's savings? And I don't think gold's big enough.
Yep.
And if you're trading with China, are you prepared to hold China's yuan, or are you prepared to hold Russian ruble? Or are you prepared to own Indian rupee or
euros?
Euros, but the euro is people don't vote the EU members in. It's quite there's quite a lot of disruption.
Yep. My thing is still though, will you be happy to hold these US dollars if next year there's going to be twice as many US dollars, and the year after that there'll be 4 times as many?
On the basis of not having any other choice, and it's been like that for 50 years. And because Richard Nixon did take us off, or take the US off the gold standard, because France was sending ships over to pick up their gold from Fort Knox, and they've decided, well, we don't want to lose that gold, so they stopped convertibility.
Yep. Well, personally, I think there's going to be a tipping point at some point.
So I won't get mixed up between a feeling of right and wrong.
Yep.
I'll stick to who's got the biggest army.
Yeah. So you think
financially or otherwise? I
think there'll be a tipping point for US dollar hegemony. It might not be for a while, but
no, 100% agree. And you have to say, well, what happened to Britain? I mean, like they were falling apart from World War One. If they couldn't have got the US into World War One, they were in all sorts of problems. And then if they didn't get the US into World War Two via the attack on Pearl Harbor, they had big problems. So the UK finally, I think, lost its status over the Suez Canal attack, and America stepped in and told France and the UK, mate, just leave the bloody thing alone. And they've gone, America's in charge. So I think it's a 50-year process.
Yeah. Oh, fair enough. I think it could happen a lot quicker than that, but
anyway, it is a good thing to disagree.
Yeah, it is, and it'll be very, very interesting. I think we've gone through a period of relative stability, and I think that is sort of ending.
Well, that's right, and like what happened, I believe, is that when somebody's pulling money out of their pocket, whether it's you're doing an IPO, if you find somebody to spend the money, peace breaks out. Okay. Now, America's been funding the world with US aid. All this money has been flowing around, and a lot of people have been getting rich off the American, what you might call it, generosity. They've been funding a lot of things. Now Trump's turning around and saying, look, I don't want to fund NATO, and I might pull out. I don't want to fund the EU defence. The commitment to the defence is should be 2% of GDP, and most of the EU doesn't meet that.
No, they don't.
So Trump is doing a fair thing, saying, listen, why should we pay for defending the world? You better start paying us. Now, that's going to cause some disruptions, and it might take us back to Australia. If you see Albanese siding with the EU on potentially putting boots on the ground in Ukraine, does Australia align itself with the EU, or do we continue with our American defence agreement? Yeah,
well, I mean, I don't see them as mutually exclusive. I mean, I don't think we'll see Australian boots on the ground in Ukraine. We are planning to spend $360+ billion on 8 US submarines. Trump's floated the idea of not actually giving them to us, even if we pay for them.
Yeah, it's only a tax for our defence contract.
Yeah, and I think you acknowledge a very good point that, like, Trump's saying, well, we're essentially funding the defence of all these nations. It wasn't all these nations that have pressured the US to spend this much. It's the US military-industrial complex that's pressured the US government to spend this much.
And maybe we should focus less on the American economy as the global economy. Who's in charge of that, really?
Yeah, and I think that the US as a world power is weaker now than they were at the start of the 21st century.
No question.
And I think that what's killed it is corporatism and the extremely wealthy.
And the lack of respect. Trump version 1 showed to Malcolm Turnbull on that asylum deal. I think he didn't give any concession to Albanese on the fact that the US hasn't got a deficit with us, we've got a deficit with them. I think, there's a certain lack of courtesy that we've enjoyed over the past 50 years, that you make yourself feel uncomfortable. And in the event of, when Japan attacked Darwin in World War II, will the US step in to protect Australia? And if they're not going to protect us, what's our defence?
Well, that's a good point.
And maybe we should probably move on.
We should possibly move on too.
But I mean, we've got the Australian budget coming on.
That will be tomorrow night. Yeah.
So the big picture on that, I think we've got a screen up there from Westpac, the fiscal aggregates. We'll put that up. That pretty much shows that we'll come into 24, 25. We'll finish the year, I think, with about a 27 billion shortfall over the previous few years. There has been a surplus, and I think we have another chart showing the annual change in the government's liabilities. So pretty much, since the GFC, we've been running reasonable deficits. That's been built up, and then we hit the GFC. The government, as we all know, spent $250 billion, and you'll see that on the chart when the borrowings really exploded. And really since the GFC, 21, 22, 23, the government's enjoyed a boom in revenues. You've seen it in your pay packet, you've got bracket creep, paying a percentage of our wages on average. I think it's risen to decades high. I think it's 27, 28% of GDP of personal income tax going out. And so we've enjoyed a surplus for the last few years, but that's being dragged into a deficit courtesy of infrastructure spending, NBN, the NDIS, of course. And so coming this year, finishing 27 billion deficit, and the forward estimates next year we're looking at 47 billion deficit, and I think the forward estimates are fairly bad.
Yeah, the forward estimates don't look good. I will caveat that by saying that usually the numbers are a bit better than the forward estimates suggest, and they have been for the last sort of 3 or 4 years.
Then why have budgets?
They always underestimate. The other thing as well is that the budget got a little better than the forecasts. I think they found about $2 billion in savings that they're going to announce tonight or tomorrow night, and most of that is from cutting the $21 billion that the government spends on consultants. So under Morrison, they gutted the public service and then replaced them with consultants. And now under Labor, they're sort of turning that back, and that's a big amount of money to be saved.
Big picture, what do you think the drivers are for the Australian economy?
The real issue for our economy that I see is that we're so reliant on personal income tax.
28%.
Yeah. In the past, we've looked at the chart of the tax mix and how much of the government revenues come from personal income tax as opposed to corporate tax or other things, and it's just personal income tax straight up and all the others straight down.
That's right. And if you look at the breakdown of the government revenue, I mean, they still got the luxury car tax, even though they got rid of the car industry. I think it's about $500 million a year in luxury car tax. I think our alcohol taxes, our spirit taxes, at all high, which is another consumption tax. We also have a 10% GST. I think that's running at about $90 billion a year at the moment. The federal, the feds are the only ones who can collect the tax. States can't impose taxes, can't impose an income tax. So the Fed collects it and hands it back through the state grants. So the elements of the other, it all comes out of the interview, whether it's tobacco taxes. I mean, they're having all sorts of trouble with the tobacco tax because of the consequences of illegal tobacco industry out there, and the crime involved. So you got tobacco tax, wine tax, luxury car tax, 10% GST, and the personal income tax. Company tax is much higher, and the superannuation tax is much higher too. As we mentioned last catch up, we have about $4 trillion in the superannuation system, and there's plenty of tax, albeit at 15%. That's growing as well. So there's a lot of levels of tax, and even though we talk about the personal income taxes, I think there's a lot of that structural tax there. Like what does it cost to register your car? Announcement from the Victorian government that if you work from home or you run a business from home, and you're claiming part of your house as a business expense, they'll now hit you with a land tax, which so there's just a grab for tax at the moment.
Yeah, absolutely. And I think the big issue I have, and the big issue that I think the Western world has, and that's sort of creating a lot of problems, is they're taxing salaries, they're taxing spending, and they're taxing the individual. And it's basically, continuing, I think, to worsen the issues that we're facing, and that is that on average, the random person on the street is getting poorer. And the tax system is only making that worse.
Well, the government's done a terrible job with our resources, and most of it walks off overseas into somebody else's pockets. For
free, sometimes, with subsidies as well.
And our gas prices are 3 times as much as the US. Our electricity prices are a multiple. And we should be resource rich, whereas in other countries, they can, Norway, they can have $1 trillion, $2 trillion sovereign wealth fund coming from the resources.
Yep.
But all we managed to do is not do that.
Yeah, absolutely. And it's.
I think structurally, you're absolutely right. The system relies too much on the personal income tax. We've listed all the taxes. It needs to put up the tobacco tax. It needs to put up the spirit tax. It needs to put up the taxes at all times and find new ways to tax. And personally, I've seen, I think the Australian Capital Territory, Canberra has put on a land tax on owner-occupied homes. It probably eventually has to come into Victoria. Because they have to pay for all the prolific spending.
Yeah, well, yeah, and look, I think that's not a great thing, obviously.
Yeah, but let's bring it back to investing. Even if it's good If it's bad, it can be good.
Well, like we said, there's a lot of Australian resources heading overseas, not being taxed very heavily. In terms of sort of what I'm looking at on the market, it's the secondary base metals. Iron ore is pretty stable around 100 US a ton at the moment, but I don't think that future demand is going to be super exciting from here. Australian iron ore miners, fantastic investments because they're the cheapest producers on earth, and that's going to remain the case. They've got great proximity to the steel producing parts of the world. But what we've seen happen to gold, I think is going to happen to the secondary base metals. There's plenty of iron ore on earth. There's not a lot of copper on earth. There's not a lot of aluminium.
There's copper.
Yeah, there's not a lot of nickel, tin, zinc, and then you can start going down the list as well into the sort of rare earths and things like that. But a lot of those metals are starting to be consumed at levels never seen before. And we've got big, large producing mines at the moment. That's not going to be the case in future.
So being positive on that side, does that make you negative on the consumer stocks? Because that's where the trouble can happen.
Yeah, I would say so, and I also think that a lot of them are just way overpriced, and they continue to be so.
The banks,
the financial services sector, but also consumer discretionary. A lot of it is way overpriced. We were sitting here a few years ago looking at JB Hi-Fi at $40 a share and going, what's the market thinking? This is trading at 12 times earnings, good forward prospects, strong position in the Australian market, and the market wouldn't touch it. And it's now boarded up to $100 a share, north of 20 times earnings, far worse, future prospects. What's the market thinking now?
It's a passive market possibly.
Yeah, I don't think the market's thinking very much at all, to be honest. I think there's value in our mining space. I think there's value in the secondary base metals. Unfortunately, a lot of the large secondary base metal stocks, and I'm going to, for example, name Sandfire because I've been a long sort of cheerleader of that stock. They're a bit overpriced. I'd much rather buy Sandfire 30% cheaper than it is now. Even South 32, I think, is a little bit expensive at the moment. But sort of the smaller end of things in those secondary base metal stocks, I think there's plenty of value there. I'll drop a couple here. Nickel mines, producing nickel out of Indonesia. There's value there. A little bit of political risk, but...
what's the regulatory risk like?
So at the moment, it's not too bad, but there's always the risk of new regulation coming in. The other thing is the reliability of their Chinese co-investors as well. But valuation-wise, I think they're very good because I think there's a huge upside to the nickel price from here. Because again, a lot of the easy, cheap Indonesian nickel is starting to be worked through now, and I think supply will dry up soon. Closer to home, Aeris Resources, AIS, Marnus Labuschagne's father. They just had a really, really good half-year report. Surprised the market didn't respond initially, but they're starting to push up now. Copper and gold producer, mines in New South Wales, Queensland.
Yep.
And very low market cap, cash flow positive, earnings positive, maybe about 10 times earnings is their share price. So in the small to medium sized space, in the mining space, I think there are good investments out there on our market, whereas most of the rest of the market is still quite heavily priced.
Yeah. On the gold front, I was looking at which countries are holding the US treasuries, and the point there is that who's reducing their treasury holdings are China and Japan. So a lot of money, central bank money, is flowing into gold, and I think we've obviously that's a self-evident something because people are, back to your point, there is a small movement out of US treasuries into the gold at the country's reserve bank level. Any particular gold stocks?
I think with the gold stocks, you want to look towards the big end of things. I still think Northern Star plenty of potential upside from here. I think, for 10 years it was overpriced, and now that we've seen gold rally, it's now underpriced. It hasn't responded enough, I think, to the gold rally.
So generally, with the GDX, the gold index ETF, that I thought performed poorly 12 months ago. Is that catching up, or is it still undervalued? It used to be a leverage play.
Yeah, I think it's still undervalued. I don't think the gold miners have been leverage play on gold at all. Gold's gone up very, very strongly, and the gold miners have really lagged the gold price.
Will it do the catch up?
I think it'll catch up, because I don't think gold's going down. Let me put it that way.
Yeah.
It'll have to catch up eventually because the profit will just be too great to ignore. Yeah. Northern Star Resources, Perseus Mining out of Africa, if you're willing to take on the risk.
Probably not.
And then there's plenty of others. Regis Resources. There's plenty of others, but you highlighted the gold ETF. I don't think you can go too far wrong with that either.
Yeah, well, I remember I did a couple of years ago. And just to pick on a sector we've mentioned before, private credit, there's a lot of regulatory interest coming out on private credit. And could I just give a general warning about if you get offered unlisted investments, whether it's via an ETF or whether it's via a private placement from your local broker into something unlisted that hasn't got ASX reporting standards, the information flow is terrible, and the compliance is sometimes questionable. ASIC are doing a very serious review of the private sector market, and they're waiting for, I get the impression they're waiting for something to blow up. And APRA, the regulators of the financial institutions, they are very worried about the problems that can happen with private credit through lack of liquidity. How are you valuing assets? I think ASIC's asked the private lenders to give them an explanation of what they're doing, probably follow that space. I just say to anybody, if you are being offered unlisted, non-disclosure, and you're a sophisticated investor, please get some good advice as to whether you put some money into that, because my experience over 30, 40 years is when the liquidity dries up, that is 100% the first place to go.
Yeah, absolutely. And I think, obviously a lot of this private credit is tied to, developers in the Australian construction and housing industry. And
if you're chasing 12, 13% return, if you're chasing equity-like returns off what is perceived as a fixed interest return, there is a lot of problems with that.
Yeah, absolutely. Yeah. And if there is ever weakness in the Australian housing market, and it won't have to be much, there will be extreme weakness, I think, in private credit.
Well, as you highlight the PE ratios of half your normal, but the housing market, we all know that's got a huge price-earnings ratio that will the US ever fall over? Will our housing market ever fall over? The government is committed to supporting the housing market. One of the budget measures coming through is Victoria has a shared equity scheme where they give first home buyers or low income home buyers, they give them 25% of the value of the house. And you have to give it back if you sell the property or you remortgage or whatever. The federal government's going to come in, I think, with a 30% scheme. 30% scheme.
I don't think that's a part of the budget. They're taking that to the election. So
possibly,
we'll see
but that's also a capital investment. It's not it doesn't appear on your P&L.
Yeah,
it'll be a capital investment, so it won't appear in the budget. Because infrastructure spending will go on the budget as an asset. So. But anyway, so the government is really committed to keep that housing market elevated.
It's interesting that their plan to tackle housing affordability is to make houses more expensive.
They're tackling housing affordability by giving you part of the purchase price of the house. And all it's possibly going to do with these sort of schemes is push the price of the house up.
Yeah, absolutely. But that's houses and holes.
Houses and holes. Possibly. Have we been going?
I think we've been going long enough. I think we've probably bored people to death.
And had some fun on the way.
We did, yeah. Hopefully they had fun as well listening in. Yeah, it probably was a bit more of a ramble, this one, but you know, some people enjoy that, some people don't. If it is your thing, like I said at the start, please don't be afraid to consider subscribing. It would help us out a lot. And we hope to see you guys next time.
Take care.